Morning guys, Joel Frank here, market analyst for YouTrading, and this morning we're going to take a quick look at the S&P 500 and just generally check up on how US equity markets are doing. So let's take a look at the chart here and we can talk through fundamentally and technically what has been going on in the last couple of weeks. So as you can see, first of all, if I really zoom out, you can see that even following this recent pullback, which is about 4% from record levels now, it might be a bit less than that now, but this bull run has been going for a very long time. Obviously we've had the global economy, US and global economies reopening after the pandemic, the very easy monetary policy, all of that sort of helped stocks recover from that initial shock in March last year. But speaking more specifically about recent events, you can see we hit record highs here at the start of September, and then stocks have been gradually pulling back. Over the last sort of 2 weeks, the pace of the pullback was fairly slow, and we did kind of form this downtrend. You can see one touch there, a couple more touches here, a few more touches here, and then eventually you can see stocks fell below the 21 DMA, which is marked here in orange, and then that started to act as a pretty good area of resistance. Why were stocks coming off? Well, I mean, it's been a long bull run. Perhaps it is time for some profit taking, especially with it looking like global central banks and developed market central banks are going to be starting to reel in their stimulus measures. There's also been some evidence of a slowing global economic recovery. We've still got some concerns about the pandemic, although obviously the vaccines have helped boost a lot of optimism, but there are still concerns about the impact on growth from the Delta variant. So all these factors were being cited as stocks were pulling back from these record levels. But then in the last, well, this week basically, we've seen some of these key technical levels be broken, and the pace of this pullback has accelerated. And then you've seen actually overnight we've had a bit of a rebound here. But the reason for this acceleration in the selling pressure for the S&P 500 and for global equities, we saw a broad downturn in risk appetite. But the trigger point was, I think, the failure last weekend of Chinese authorities to signal to markets that they're going to take concrete action to prevent this China Evergrande default from having contagion effects. So China Evergrande is a massive property developer in China. They've got massive amounts of debt. That looks like they're going to be insolvent. They're potentially going to even default on a debt payment that they've got later this week. And because of the size of the company, there are concerns that if they go bust, there's going to be like a domino effect on other property developers and Chinese banks, and Chinese financial stability is under threat, or feared to be under threat as a result of the Evergrande situation. That, I think, wouldn't be an issue if Chinese authorities basically indicated some concrete action. So what I mean by that is potentially they could bail out Evergrande, although to be fair they have said they're not going to do that, but potentially then they could step in to help out the companies that are then affected by Evergrande's failure. But they haven't really signaled that yet either. So I think there was this cascade of fears that, you know, there's going to be this crisis in China that's going to affect Chinese and therefore global growth. And that caused the break below this long-term uptrend that we've had running since March. We broke below that. We broke below the 50 DMA, which has also for a very long period of time, even since last year, 1, 2, 3, 4, 5, 6, 7, and even 8 if you look at earlier on in the month. 8 times the 50 DMA has been a good area of support. Well, it broke that too. And we even briefly yesterday nipped below this, is that the August low? Yeah, we even went below the August low. The August, what day was that? August 19th low. So yeah, things got ugly. But there has been a bit of a technical rebound. The thing is, what are we looking out for markets going ahead? Well, sticking with the Evergrande theme, Chinese markets and just generally China is on holiday until Wednesday. Okay, public holidays across Asia actually. I think Japan have just come back, but South Korea is still on holiday, Taiwan's still on holiday. So we're going to have to wait until the Wednesday Asia Pacific session to see what, number one, how Chinese investors, because Chinese markets have been closed, how do they react to all of this? Number two, with all of the government workers coming back from holiday, is there going to be some action? And if there is, if the Chinese authorities do announce something on Evergrande to basically protect financial stability, well then I think we could be in for quite an aggressive rebound. Potentially not back towards record levels, but potentially we could be looking at getting back above last week's lows, back above the 50 DMA, and potentially challenging this recent downtrend in this sort of area here. So that's 4,450. We're currently testing the key 4,400 level. But it's not just about China for the rest of the week, guys. There's also loads of global central banks, like 6 G10 central banks. I mean, I think the Riksbank has just reported, but they were going to be always going to be one of the more boring ones. We've got the Fed, Bank of England, BOJ, Norges Bank are going to be the first G10 bank to hike rates. We've also got loads of EM central banks. We've also got negotiations about raising the debt limit in Congress going on this week, so that's another thing to watch out for. So there are other things as well this week for equity investors to think about. But yeah, guys, potentially if Chinese authorities signal help, then a bit of room for a recovery. Hope you enjoyed the video, and I will see you all in the next one.